Well, hey everybody, this is Rick Banez with Fred Ria and the Real Estate Investor Group, and I am coming for you into the new year. And sorry I didn't get a chance to post a video for this November's numbers in December. As some of you might know, I was on a Southeast Asia experience. We went to Singapore, Thailand, Brunei, the Philippines. It was amazing, and we had a great holiday in those places. And so I wasn't able, the internet wasn't that great, so I wasn't able to post something. So here I am trying to catch up and share with you guys what has been going on in the month of November. And here in about another 10 days or so, I will have the December numbers. But let's get into the data, okay? So here we are with new listings. New listings were down significantly from October, a negative 25%. We only had 384 new listings and a year-on-year basis of a negative 28%. New listings at 384 with a 5-year November average of 554 means we're down significantly. And it's tough. It's a tough market out there, especially if you're buying. And it's if you're selling, it's still a seller's market as a result of new listings being down. There's just not a lot out there. In terms of new pendings, we had 402. It was down 5% from October of last month and up 0.5% nominal increase of 400 in November of 2022. So year on year, up just a tick. New pendings are down compared to the 5-year average of 517. In terms of closed sales, we ended the month with 359, down from October of 12%, and from year on year, down a negative 12%. So the 5-year November average was coming in at 520. We're at 359 on closed sales. On the next slide, we've got the median sold price was flat from last month. It came in at $439,900. That's $439,900. Comparing it to November of 2022, it's up 3.6%. So if you're noticing a trend here, it's staying pretty tight in terms of prices being up for the year. And I anticipate that December numbers will continue to show that, you know, all the naysayers that thought that we might see a crash, if it's gone up 4%, so it's not happening. If you look at the 5-year November average of 382,000, comparing it to today's average of 439,000, you've gained about $110,000 in equity, and so it's not bad if you're holding on to real estate for the long term. In terms of the chart to the right, you'll see that the closed sales, comparing it to, you can kind of see geographically or graphically, I should say, how the months are faring in terms of closed sales and what the median sold price is doing. And it's just ever so slightly going upward. Will it last forever? Absolutely not. I'm not here to make that prediction. But it surely seems very strange, especially with this low inventory environment, high interest rates, low inventory. It's definitely a supply-demand equation, and that is causing prices to, again, increase year on year 3%. And so anyway, very interesting times we live in. In terms of the active listings, we had 815. It's gone up a little bit. But in terms of year on year, it's down about 160 units. So of November of 2022, it was 974 active listings. This month, 815. The average days on market has ticked up just a bit. It's gone up 3 days. So now we're average days on market of 29. And if you recall correctly, the average days on market, what that is once it goes, it counts the number of days of once it goes active to once it gets under contract. And so it's taking about 4 weeks for a home to get under contract. Still pretty quick, which indicates, you know, low inventory. October, we were at 26 days on market, and today we're at 29. So just a difference of 3 days. The average list price ratio. So the average sold to average list price ratio is coming in at 97.8%. What it was last month was 98.7%. So almost a point difference. And year to date, we're at 99.3%. But let me give this to our fellow investors some thought, what I'm hearing and what's going on in the market. If the average selling price is $439, and there's just not a lot of inventory of below the average selling price of $439. There's not a lot of homes in the 300s. There's not a lot of homes in the 200s. There's not a lot of homes in the high 300s. There's not a lot of homes below the median selling price. There are homes above the median selling price. And the homes that are listed for sale below the median selling price are selling quickly. The ones that are selling above the median sales price are going a little bit slower. And so is it a lot? No, but they're just the higher priced homes logically are staying on the market just a little bit longer than the ones that are below the average selling price. The average selling price, if it's $439, this just means simply that they're the ones that are going under contract very quickly, and the ones that are on the market that are higher than the above average selling price are typically taking a little bit longer to sell. Turning our attention to the next slide, sold dollar volume. Our total sold dollar volume is down 13%. So this is a combination of no inventory or low inventory, less actives. And as a result of less actives, even though sales price is going up, average dollar volume is going down. I already mentioned the average sold price. Let's talk about units. So units are down about 13% year to date, comparing it to last year. And you'll see that the average, there's a slight difference in terms of the attached average sales price versus the detached. Anything that's detached is a single family home, and attached is a townhome, okay? So the average selling price for an attached townhouse is $393,000. The detached average sold price was $475,000. And so you'll also see how many townhouses are sold in relation to the number of single family homes. There were 60 townhomes sold compared to 299 detached single family homes sold. The townhouses are selling higher compared to last year, whereas single family homes, the number of units sold is down about 15%. So definitely there's not a lot of inventory when it comes to the single family homes. In terms of the active listings and new contracts, this slide talks about active listings and new listings. The active listings, comparing it to year-on-year change, is down 16%. The number of new listings is down 28%. And all pending is down about -3%. In terms of the financing, now these are the homes that closed in November. So if you add up all of these numbers, there are probably about 350 units that were sold. And again, the Fredericksburg Association of Realtors comprises all of like the following counties and cities. So City of Fredericksburg, and then Spotsylvania, Caroline, King George, Westmoreland, Stafford, and I think I got everything, Caroline County and Orange County. And so those are the counties that are involved in the Fredericksburg Area Association of Realtors. If you look at this chart and you look at the type of financing it was involved in closing homes in the month of November, the number one type of loan product out there was conventional loans at 140 units. The second highest type of loan product sold was a VA loan at 93 units, followed by FHA at 61 units, followed by cash at 53. 5 people were, I call them creative and smart. And it dovetails into our teaching lesson that we're going to be having on January 11th about assuming loans. there were 4 assumptions in the month of November. In other words, somebody taking over someone else's mortgage payment. And that there was one that was owner financed and one that was other. But I like this just because it gives hope to those people out there that are trying to be creative, trying to make things happen. And so assumption, a total of 5 people were doing some very interesting things out there related to assumptions and owner financing. On to the next slide. We talked about the average days on market being 29, but this breaks out the average days on market based on the individual number of days. So you've got, as you can see, the first couple of months, the first 60 days, let's say, you're looking at the homes of approximately 200 units going under contract in that first 60 days. After the 60 days, the numbers, I'm sorry, that's incorrect. It's much higher than that. It's closer to, let's see here, 140, 200, 300, 400, approximately 300 to 400 units that were sold in the first 60 days. After that, you'll see that the numbers drop off considerably. After starting at 61 to 90, 23 units were sold. But the majority of the homes are selling between the 1st to the 10th day at 144, and the 11th to the 20th day, 43. So in that number alone, it was approximately just under 200 units that were put under contract in that first 20 days. Only one out of the bunch sold between 361 days to 720 days. And 5 units were sold between 181 to 360 days. So majority of the listings, majority of the homes are definitely selling within that first 20 days, even the 30-day mark. Just the rule of thumb for anybody is be there first, see it, determine interest level, and then you can make a decision and be the first to strike. If you're waiting around, and it's a strategy, definitely. If you're don't need this home, but you're waiting around for maybe picking up something that might need a little bit more work, then wait till after 60 days, 90 days, because they are still selling, but you might be able to negotiate and do an assumption, or might be able to do an owner financing or do some creative financing. So, or even the cash buyers, the people that just willing to buy it for cash at a steep discount. Those are the ones that you want to wait until it's been on the market for 3 months or so, even 6 months. You're more likely to get a deal. And then lastly, here is our detailed chart. I know it's very tight. I'm hoping you guys got a big screen to look at this, but it shows our price band. Our price bands for single family homes, 3 bedrooms, they're selling between anywhere from 200 to 500,000, 200 to 500,000. The majority of them are selling between 300 to 399. 52 units sold from 300 to 399, followed by 34 units sold that are 3 bedroom single family home, 400 to 499. And the remaining 22 units sold between a price band of 200 to 299. So if you're dealing with the reality of what's out there and what you're looking at, if you are able to acquire a home and you're a wholesaler and you're able to acquire a home for below the 200 mark, and they're out there, if you see the detached units, there were a total of 3, 4, 5, 6 units that were sold below 200,000. And you're trying to sell it to somebody who's a rehabber who's going to fix it up. There's got to be meat on the bone. There's got to be enough margin in it for them to make their nut after repairs and to sell it in those price bands. And the big majority of them are going to sell it where there's the most attractiveness in terms of price point. That's the 300 to 399. If you compare that to a 4-bedroom single family home, majority of them are selling between 400 to 499, 54 units. Between 500 and 600, 42 units. And between 600 to 800, 33 units. So obviously these are bigger homes. The majority of them are selling between the 4 to 499. I think it's an affordability thing. And you can see what the average sold price is for a 4-bedroom, comparing it to a 3-bedroom. There's almost $100,000 difference in, well, $150,000 difference in a 4-bedroom versus a 3-bedroom in terms of the average selling price. But the major increase, the average sold percentage change, is actually happening in 3-bedrooms. It's increasing at a rate of 5% versus 1.3%. But there were, enough, if you can make an extra $120,000 to $150,000 for that extra bedroom, it might be worth it to go after. So anyway, this is from an investor perspective, not so much for buying it for your own home, but at least it gives you some idea of if you're paying fair market value and whether or not this is a good price band to be in. You don't want to be on the high end. You could see how much is sold between 1 million to 2.5 million, only 4 units sold. And so there's not a lot of units. That's not where a lot of the emphasis is on. The emphasis is going to be in the price bands that you want to compete with, and you want to make sure there's value in. So anyway, I hope that information has helped. Let me go through our next in-person meeting at Wegmans. Will be on January 25th at 6 o'clock up in the cafeteria area. Grab your food and let's network. And then the next upcoming meeting, our online training and education portion, is going to be on January the 11th at 6:20. So we start sharp at 6:30. We do a little networking at 6:20. And if you want to see what the topics are for the coming months, please go to www.fredria.com. And we are posting these recordings on YouTube. And if you have any information about becoming a member of National RIA, reach out to me, reach out to Anna. We'd be glad to help set you up with that. So I hope you guys had a wonderful holiday, a Happy New Year, and a Merry Christmas. And we look forward to seeing everybody on the 11th as we kick off 2024 with a great presentation about assuming mortgages and assuming sales of existing homes. So I'm looking forward to that, and looking forward to seeing you all. And you guys have a great day. Take care.